Hey everybody, welcome back. I'm going to need your help. Tonight you're going to see this in dark mode. The question is, do we switch to dark mode? Do we get rid of this watermark up here and just stick with the bigger watermark? Please comment, let me know what your thoughts are. Getting a lot of requests to do everything in dark mode from now on. I'm fine with it. It's a little easier on the eyes, and I can always leave this big watermark in versus this one up here that seems to bother everybody. So just let me know your thoughts on that, but let's get into it. So tonight will be dark mode. And couple things here. The ES, when we're going to look at, you're going to say, okay, well, that's what's going on with the ES. Then we're going to look at the NQ, and this is what we're going to say with the NQ as well. All right. Now, there's not really any value that we're adding there. RTY, same thing. So how are we going to look at this, and how are we going to make any kind of decision based upon what we're seeing here on what I'm showing? And the bottom line is, for me, where I think that the metal really meets the road is going to be in what you're seeing down below. So I'm going to stick with the NASDAQ because that's been the one that's been driving. And what I have in front of you is the breadth. But the breadth is calculated between all the exchanges, and then it's weighted based upon which exchange I'm looking. You'll see little nuances on it when it moves, right? So you'll see it move right there. See how this one widened out a little bit. Okay. See how this down here, how this one got tighter. And then we're going to look at the NASDAQ, and you can see how that one just got a little bit wider there. Okay, so what I'm doing is I'm taking the breadth of all the indexes, I'm putting them together in an equation, and this is what it winds up with, and then it's nuanced based upon what index I'm looking at. I hope that makes sense. Let's get into it. So one of the key things that I see happening here is that the breadth across the entire market has been getting worse. It has not been getting better. And I really want to comment on this, and then I want to get into smart money, dumb money, and then focus on one trading tip that you can use for tomorrow, and we need to go through all the earnings. So let's just drop that, make that white, and then see this little section right here? Okay, so you see how during this entire time from the 15th, November 15th over, we could actually even argue that we could go to here, couldn't we? And all that breadth, look how beautiful that is. And this is encapsulating what again? This is encapsulating the New York Stock Exchange, American, NASDAQ, S&P. It's encapsulating everything, okay? It's just weighted differently when I'm looking at this, just a little nuanced. All right. So, and I'll make this available. I'll figure out how to put it in here and share it. So we can see how great and pretty the breadth is here, and everyone's all excited. And then the breadth, not so good. And then we're going sideways. So then we're going to just move this over here for a second, and we can see that, right? We can see that that's not great. Okay, but nonetheless, it starts getting good again. And then it changes, and then it gets bad. All right, so this is where we're at. So herein lies the issue. The issue becomes, if we start to look at this, you start to get a pattern that is emerging. You're getting this pointing down. What does that mean? That means that the breadth of all the markets is getting worse. The index, this NASDAQ, is going up. Now, they don't ring a bell when this is going to turn, but this is not sustainable. You have two options here. Your first option, okay, there are two options. Your very first option is that what? The market drops, okay? Your second option, okay, is that the breadth fixes itself and does what? Go higher. There are only two things that can happen. Now, if you overlay this, just very quickly, stay with me. If we overlay this with this chart, I actually set the chart up ahead of time. And we look at, let's clean all this off, and we look at the RSI. My RSI settings are a little different than yours, but they're very similar. Now, you have this declining average that we can all see. And then we go here, and then we take a look at this, and we can all see that as well. Now, when was the last time we had anything very similar to that? And we'd have to go back to July, and you'll see it right here in July, and I will put that in. Now, I think that when this divergence is going to trigger, this one's actually not too bad, but it's there. So I think, we also remember that it was Japan that intervened, that the larger issue that's holding us up right now is that smart money and dumb money mean institutions and retail are doing the same exact thing. So as long as they do the same exact thing, I think we're fine. I think if we start to see that divergence, I think we're going to have an issue. Here, take a look at this. From time to time, we like to do a quick update on smart money, dumb money. And as we know, we don't refer to this as smart. We don't really refer to this as dumb. What we do is we like to refer to this as institutional money and retail money. And that's based upon how this is calculated. If you look at the calculations on how they arrive what is, quote, smart money, versus how they arrive at what's dumb money. It's basically institution investment and certain assets that we really, as retail investors, don't have that kind of access to. and then dumb money, which would be your ETFs or your options, your small lots, things like that. That's how it's calculated, and that's how they dive it up. And the goal is that whatever smart money does, you want to do, and whatever dumb money does, if they're buying, you want to do the opposite. We have gone over this ad nauseum as to why that is not the case. But what we are going to do is we're just going to do an update here and talk about what's going on. So what we always look for are patterns. And we're only going to go back 3 years because I don't really want to include the pandemic data. And we all know why. Obviously, it was extremely skewed by the amount of money that the Fed injected in the market, and we'll leave it at that. So here's smart money, blue. And what you're going to notice in blue is every single time that it breaks this line, this zero line, we're going to call it, even though it's not, it's a 0.7 line. But every time smart money gets overbought or overly excited, and then they break to the downside, that means institutional selling, right? So if you know what these are and you know how they're calculated, you can actually use them in a better way to your advantage. It's telling you that institutional money is selling if you look at it that way. All right, so it makes a little more sense to look at that. So you can see how these could be a precursor to a high. That seems to be a little bit of a way to kind of look at that. Does it work perfectly? No. But then that also falls into the spread, and we can talk about that. What I tend to like about this is more the spread, which we're going to get into, but we're always looking for those kinds of divergences. So for example, here you can see when smart money went over and then they started to sell, we went down. Notice how it flipped over here when we started looking at what? When we started really getting into the dumb money right here and here, look what happens here now, okay? And look what happens when smart money here, look what happens when it starts to roll. It's marking a bottom. So we're seeing the shift, and that shift started to happen. Why? Well, that shift just started to happen as time went on, and what happened during all this, right? This is that excess that you're wearing off. So as we got rid of that excess, you're starting to change how these monikers are working, right? What is retail doing? Well, retail is getting out and troughing here, okay? Meaning they were buying all into this, what you can see from where they started to here, and then you can just see how they're getting out, right? Where retail seems to be kind of ruling the roost right now more than institutions. That's why it's very important to watch these and see if the dynamic changes. And you might want to watch it again, because before the dynamic was when this was going to be a precursor, right? And then all of a sudden you can start seeing right here in September, it starts to change. When we see that, those kinds of changes, we want to pay attention to them because they're significant. It tells us who's really in control of the market right now. Well, if you look right now, you're going to notice a couple things. One, we're trading completely in tandem, and we're going to talk about this because you don't see it very often. By in tandem, meaning the spread between these two is not going anywhere. They're doing the same exact thing. So if retail buys, institutions are buying, right? If they sell, we're selling. Now you're starting to see a little bit of a difference now, okay? And this is starting to head lower. But as this heads lower, what has been happening? We've been seeing this drop, right? And we've been seeing the retail step in, and then when they step in, look what's happening. So you're seeing this massive, in my opinion, shift from a year ago. But I thought this was fascinating because we know what this date is right here. We know that this is November 1st, and we know November 1st was when Powell came out and said, we're not going to raise rates anymore. So I think it's fascinating to me to think about this is retail right here, and institutions sold equities on that, but retail was smart enough to buy it, but you're going to call retail dumb? It doesn't make any sense. So I think we're better off looking at these are retail investments and these are institutional investments. And we know that because we understand how this is calculated. Now, again, this is not mine. This is by Sediment Trader. I have no affiliation with them. It's just really good data, and I enjoy using it, and I enjoy going over it. I find it extremely helpful to just see what is everybody doing. Right now, everybody's doing pretty much the same thing, and we're going to talk about this. But what we want to watch is what has worked in the past recently that is telling us that we might be getting toppy. One of the things that we note is when we see dumb money, hence up here, when we see retail up and over and break, that is marking breaks, tries to mark a high. But what happens here? We don't get the divergence. We just get this. We get the same thing over and over again. So this is going to be really muted because institutions and retail changed their mind. Here they didn't change their mind, and you had follow through. That's why it's important to watch this. And if you take a look at this over just different time periods, for example, here it is on a 1 year, and we're going to stay more shorter term, 3 and 1 on this. But what do we see here? Well, we see dumb money or what? Retail, and what do? It breaks, okay? And then the spread here is absolutely huge between these. And we can see that very clearly, right? All right. So then you can see in here how it's getting tighter and tighter and what happens when it flips. Well, right here, we have this bottom mark. But you would note that that bottom is where retail is buying and institutions are selling. It's kind of nutty. But look how close and tight this was in here. And then look at the flip. And then look what happens when retail starts buying. Retail stops buying, but then everyone starts buying together. And when they start all buying together, we're just getting this harmonious move up because nobody's really selling. How long does that go on for? Well, that's a really good question. And I don't really have an answer to that. What I would say is this. I went back in history and was looking at and trying to find this out. I don't have any really good time when these were that close together, where they moved like this. I mean, I went back years and just looked for blocks of time when they moved like this. And I think it's because you're going through this huge rate adjustment. We raised rates faster than any time in history. So people are kind of out of sorts, but we're staying in the same vein. You're having nuances on it, right? Where you have a little bit of a drop here. And we can all see that right in here, right? This little drop. And then you can kind of see this little rise right in here. And I think that's interesting. And now you're kind of getting that again, where we're dropping right here, but this is kind of rising, isn't it? So there are things that we want to pay attention to. I also thought it was fascinating because I just kind of like a nerd with this stuff. You were only under this line on retail, meaning not overly optimistic, for about a week. If you kind of look here, from about the 10th to about the 19th, that was really about it. And I think that's also very telling. So now if we take this data and we look at this data over a different time period, meaning let's look at it over a 5-year, but let's look at it as the spread. So what you have is you have smart money divided by dumb money, or institutions divided by retail. And this gives you a confidence spread. And the spread is supposed to mark levels and tell you exactly what's going to happen. And we all know how that goes. But you can see where the spread was up here, and you can see how that played out. You can see where the spread was here and how that played out, right? So these spreads that we're talking about, they don't always mark the same exact way. But the divergence to me is what's really important. Why? Because they do mark areas where somebody's just dead wrong. And someone's going to have to play catch up one way or another. Now, whether or not that's, people say, oh, well, that means that retail's overinvested. Well, not always, right? It's not always going to work that way. It can shift. And we've seen that, right? You have seen those levels and you can see them here. Well, this is really hard to use, and we know why. I'm not going to keep saying it, but you get it. So I want to pay attention to this, right? But then let's just take a look at 5 years. How many times, looking at this chart, in 5 years have we been in a situation where we have this block of time where we're doing nothing? Right? And again, I can't really use this, and we know why we can't use this, right? So we're just going to kind of block that out. We can't use that because it was just overly inflated, and we know why it was overly inflated. So I have this section in time, and if we look at this section in time, and we just drill into it just a little bit more, we go to a 3, look how tight this has been since the beginning of December, really. And it's just straight across, just they're doing the same thing. I think this is important to watch. I think it's more important to watch this here. Take a look at it from this perspective as well. I think it's more important to watch than actually which way it goes, meaning I think it might be more important if retail falters and institutions buy, because retail's the ones that have been in charge of the market. We saw that earlier from the previous slides. But I think the divergence is what's going to be interesting. Because if we lose one of these buyers, because right now you have both buying, I mean, that's what we have going on. Both are buying. So if they're both buying, if one of them stops, then the market's probably going to slow down. And the question is, are we starting to see institutions slow down a little bit? From the previous graph, it kind of looks that way, doesn't it? So we're really going to have to watch this and see how it plays out. But I thought that it was interesting to point out that since January, it's been like they're sharing one brain. And we're still at a level where red is supposed to say that we're underperforming, but are we? Not really. And this is supposed to mark the lows. It kind of did, right? And it kind of did here too. And it's doing what it's supposed to do, but this is supposed to be marking the highs. Well, if you went on that and used it from that perspective, you would have not done anything from December on, which kind of would have been a mistake, right? Well, I mean, here's December, but you get it. So I think the best thing for us to do is to continually monitor this. Let me know if this was helpful. Continually monitor this, and let's see if we start getting some kind of differential between this spread and see if the spread starts getting wider. So in front of us is the P&L on this account that I run that is linked to the Alpha Chasers community. I want to go through one trade that I did this evening because I always talk about patterns, and there's one thing that you should know about these patterns after hours. So you can see it right here. Let's change this up, and we'll change the color of this. For those that ask, I just use Screen Brush. I actually use the free version of this thing. It's pretty good. That's how I get these little things here. Sometimes I get asked about. So we have a little trade here. We made $14.55. Again, this is one account that I trade. This account is done aggressively. It's done day trades, and I use it also for this account and another account for after hours trades. Okay. What I want to focus on is this trade, and I want to focus on after hours. This is ALT, and you can just kind of go through it. Beyond didn't work, small losses. But the one thing I guess that is kind of important about this is you'll notice that the losses, if you took the averages, you'll notice that all the losses are always smaller. I don't play games. Like if I'm losing, I'm out. I just get right out of the way. I do not play games with it. P&L open. I think I cut this off a little too much, but you get it. There's the P&L, and that's what's open on the day. VKTX, I have a position there. It's just down a little bit after hours. So I don't have a big position in this account. I have a much larger position in another. So that's that. But I think what's important about this is this, for me, because I want to show you how I did what I did. I also think it'd be helpful to show you how to sort through which ideas you're supposed to do after hours. I don't know that we're going to get to that tonight, but I want to show you how to do this trade so that you understand how to do it, and then also so you understand where you're supposed to sell it. I'm getting a lot of really good comments on these videos and doing them this way, so I want to keep doing it because it seems like people are learning a lot, and that's the whole purpose of me doing these videos, is so that people get educated. So this is really simple. We already know that this is coming out with earnings, right? IOVA. We already know that we've seen several upgrades on the stock, so we already know it's hot. We already know that this earnings is past. Does anybody really care about the past earnings of a drug when you're supposed to have a new drug? No. So the people that are selling here have absolutely no idea why they're selling, right? So entering this trade, all I'm looking for is a when. That's all I'm looking for, is the when and to quantify. Okay, that's it. This selling down is just silly. This moves based upon future expectations. Okay, it's not moving because it was supposed to make $1 million and we made 400,000, right? That's not why people are buying this. They're buying it for the future expectations, okay? Yes, you could say that about any company, but in particular, companies that are biotherapeutics, you're buying it for that new drug. You're looking for that VKTX hit, right? So, but before I digress. All right, so all I'm looking for is a when. So I have a long bar down with no shadow. Okay, so that tells us that's a Marbuzu black. Just let it fall down. Let it do its thing. Then you get this long undercut here, right? You stop dead. Note where the open is. So now, in order for this bar to do what it did, in order for this bar to form, it must open, it must sell down, right? And it must close. And you're going to say, well, that's kind of obvious. Yes, it is kind of obvious. But here's the thing about that. When it goes back over the open, okay, most of these, when they're this long, they're never coming back over that open, right? Very rarely. If you go over that and then come back down, you know. So in other words, see how this came down? And then from there, let me get this pointer for a second because this is really important for people to get. See how your opens right here? So you have this wick right there. Wicks are what? Price rejection. Price rejection up here, you have no buyers. You had buyers before, where'd they go? They're gone. So now what do you have, right? Okay, so now you know that. So this opens, goes up, and then to turn red, what must it do? Come back down, right? Not rocket science, we know that. But that's a tell, just like this is a tell. Right here, what's it do? Drops, forms a wick. Wicks are what? Price rejection. As soon as it goes over, please listen to these words. As soon as it goes over, it gets on my radar that it's a buy. Now, if you want to wait for the 1 minute close, that's fine. So all I did here was wait for that close. As soon as it closed, boom, it was on. And then all I'm doing is quantifying my risk. How am I quantifying my risk? I use two things on trades like this. Number one, I would use this low, which was this open as well. I don't really want to get below that open. Number two, you could just use the wick. For intensive purposes, after hours, when you're trading after hours and you know you're wrong, just get out of the way. You want to cut it sooner than later because these moves after hours are vicious. They just are. Now you're in, and now what are you getting? These beautiful green bars, and look how they're lighting up, right? So they're giving you no indication that you need to be out. But when I got to this, the very first thing I did was sell a portion into it because this is the first area that you could have a problem. So I sell into that. See this right here, this line? This is the area that you always have to watch after hours because this is the spot where people have no edge anymore, and that's the VWAP. If you go to regular hour VWAP and you get through that and you had news that wasn't as great or didn't do what people thought it was going to do, even though it doesn't really matter because we're focused on the future, it's still, there's no edge in buying this here. There's no value in buying this here, right? If you bought it here versus buying it here, there's no value, right? The value was down here. Okay, so once it gets back to here, all the people that bought during the day that were hoping, right, on all their hopes and dreams are smashed. They're waiting for 19 or 25 or whatever. Once they get back to break even, they cut it. So this was really short, but just watch that, how we did the open, and just always remember, you always want to watch the VWAP, okay, on any trade. On any trade, for example, like if you go to Mara after hours and we take a look at Mara and we just drop a anchored VWAP, let's find that 930, you're right there, boom. All right, so when you see that anchored VWAP right on the day, just for the day, and now watch how that plays out. So look, it doesn't really matter here as much, but like, look at it, pops over, right? You get the reversal, gets there. What happens as soon as it breaks that VWAP? That's it, it's done, it's toast, right? Trade's done. And you can basically go and look at any stock after hours that tried to rally like this and go look at that anchored VWAP. Hope you found that helpful. So the reason I'm showing more of the P&L and more of the trades and more of that account is because you're asking to see it. The more that you ask to see or what you want to see, just let me know. I'm more than happy to do that. Some people have asked for time and sales because they want to plug it in and look exactly at the charts. I'm going to create a Dropbox on that because I got so many requests for it. I have no problem with that. I have no problem with showing anything. What I want to do is I want to go through the earnings now, just so you're prepared for what happened this evening, because there's a lot of things that happened. So after hours, we can just see that we're down about 10% right now at the time of filming this on Mara. At the time of filming this, none of the conference calls were completed, just FYI. So I would just take a look at Mara and that you're down. This is really going to move on Bitcoin, but just be aware of it. Quite frankly, I don't know what they wanted. This was a pretty good report. Now, this thing doesn't really trade on valuation, it trades on speculation, right? And we can see here, but this was a blowout, in my opinion, and I think it was pretty good. And I'm surprised it's down on that. But that could be telling you a lot of things about what we're going to see happen tomorrow with some of the Bitcoin names. So this could be a precursor to that, but I would watch that. Also, with what happened with Coinbase, we had a really nice short on that today. I'm going to walk through that tomorrow, actually, so that you can watch it. But this was actually my 1,000 lines sitting there. But this was a really nice reversal. I'll show you a portion of it right now. This was, to me, like the one thing that I can really tell you that you need to do, and I could really save you a lot of time. I could save you years right now if you listen to this, like literally years. When you have an opening price, if you mark off your opening price and the underlying asset, we went through this the other day, but just this alone, if you don't want to do everything I just suggested in the previous video, if you just mark the opening price and everything else is ripping, and this can't even get over the opening price, see it? Bonk, 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 right? Tries, matumboed. So once that happens, it's on. And then just mark the first 5-minute bar. I mean, it's not a coincidence that first 5-minute bar is so devastating. Tries, rejected, perfect. I mean, perfect evening start. I mean, legitimately perfect. I think you have almost a perfect like bearish harami right there. I mean, just like textbook trades right at the top of those levels over and over again. So, people say, I don't like candlestick patterns. I mean, I love them. Anyway, just be aware of that. That's part of it, but I'll get to the rest of it. And that's before the news that, people had their accounts set at 0, which seems like that would be a problem if I had an account there. But I want to go through the big ones tonight that I think are the ones you want to watch tomorrow. DUOL. So you're up about 20% after hours, crushed, raised guidance. I mean, crushed. So very little to add there, very little to say there. OKTA, absolutely crushed. You can see it up after hours. We're struggling a little bit with 108. You're going to want to watch that 108 level tomorrow, but absolutely crushed. Again, AI. He usually says something silly on the conference call, and the conference call has not taken place yet. But you are up, and the loss was half of what it was supposed to be. So there were some really good ones, and then there were some, I wouldn't say debacle, but you came out and you're going to issue a dividend, and they issued a dividend for the first time, and that should be received well, that they issued a dividend. Now, if you take a look after hours, I actually had a decent trade in this to buy, and I do think that it might find a footing after the conference call, but I don't play that. I want to see what happens. So if I go here and drop the anchored VWAP, you can see how it's respecting anchored VWAP. You remember this from some other trades that we went through and other things that we talked about. So if we look at the anchored VWAP, you can see it's respecting it. After the conference call, I'll get more of a sense of what's going on, figure it out. But you lowered guidance. You can't lower guidance. You can't be this, well, I mean, you have to if it's not accurate, but you have to be really careful there. So now you're in this gap, and the question is, do you go to 283 tomorrow? So software could have an issue tomorrow. The OKTA was fine, but CRM and then Snow is a little bit of a disaster this evening. Now, Snow gets hit the hardest because it has the highest price sales ratio of any stock out there. This is why we talk about the stool and fundamental analysis, macro analysis, and understanding that the highest price to sales ratio is the one that's always going to get clobbered if it can't beat, right? And it really came in lower. So you have a CEO that's leaving, and on top of that CEO that's leaving, you have some other issues out there, right? And these other issues are the fact that you lowered guidance. You can't do that when your price to sales ratio is what it is. So they're the ones that I'm really focused on tomorrow, and there should be some really good trading opportunities. That is it.